Hello, and welcome to the first installment of our in-depth series, where we will be conducting a neutral and comprehensive review of Tax Network USA and its services. The sight of a certified letter from the Internal Revenue Service, or the IRS, can be one of the most stressful experiences a person can face. For millions of Americans, tax issues are a complex and often overwhelming reality. Whether it's the result of a sudden financial hardship, a misunderstanding of the tax code, or simply falling behind, dealing with the IRS can feel like an insurmountable challenge. This series is for anyone who has ever felt that stress and wondered where to turn for help. Our goal is to provide a clear, balanced, and educational overview of the tax relief industry by focusing on one of its prominent players. Before we proceed, it is absolutely essential to state the following. The information presented in this is for educational and informational purposes only. It does not constitute legal, financial, or tax advice. The tax laws in the United States are incredibly complex and subject to change. Your individual financial situation is unique. Therefore, you should always consult with a qualified and licensed professional, such as a certified public accountant or a tax attorney, before making any decisions regarding your taxes or finances. This series is not an endorsement or a critique of any single company, but rather an educational exploration. So, to begin, what exactly is a tax relief company? In the United States, when an individual or a business owes a significant amount of money to the IRS or a state tax agency, these specialized firms offer to step in. Their primary role is to act as an intermediary between the taxpayer and the tax authorities. They typically employ a team of federally authorized tax professionals, which may include enrolled agents, CPAs, and tax attorneys. These professionals have the authority and expertise to represent clients before the IRS. The fundamental promise of a tax relief firm is to navigate the complex bureaucratic landscape of tax agencies, explore resolution options, and work towards a settlement on behalf of their client. This brings us to the company at the center of our review, Tax Network USA. According to their public information and marketing materials, Tax Network USA presents itself as a full-service tax resolution firm. They state that their mission is to assist taxpayers across the country who are facing serious tax problems. They emphasize their team of experienced tax professionals who are equipped to handle a wide variety of issues, from simple back tax situations to more complex cases involving audits, liens, and levies. The core service they offer is representation. Essentially, when a client hires them, the company takes over communication with the IRS, aiming to relieve the taxpayer of that direct burden and pressure. To truly understand the services a company like Tax Network USA offers, we must first understand the problems they are designed to solve. Let's break down some of the most common situations that lead people to seek their help. First, and perhaps most common, is the issue of back taxes. This simply means a taxpayer owes money from previous tax years that has not been paid. This can happen for many reasons: underwithholding from a paycheck, self-employment income without proper quarterly payments, or an unexpected tax bill after filing. When these taxes go unpaid, the IRS begins to add penalties and interest, causing the initial debt to grow substantially over time. It can quickly spiral into a figure that seems impossible to pay back. Next is the more serious issue of unfiled tax returns. The law requires Americans to file a tax return every year they meet the minimum income filing requirement, even if they cannot afford to pay the taxes they owe. Failure to file can lead to even steeper penalties than failure to pay. The IRS can also file what is known as a substitute for return, or an SFR, on the taxpayer's behalf. This is rarely in the taxpayer's favor, as it is filed with a single or married filing separately status with only the standard deduction, often resulting in a much higher tax liability than if the person had filed themselves. When tax debts go unaddressed, the IRS has powerful tools at its disposal to collect the money it is owed. This is where we see issues like tax liens and tax levies. A federal tax lien is a legal claim against your property when you neglect or fail to pay a tax debt. It attaches to all your assets, such as real estate, personal property, and financial assets. A lien can severely damage your credit and make it difficult to sell property or obtain loans. A tax levy is the actual seizure of your property to satisfy the tax debt. The most common forms of levies are wage garnishments, where the IRS takes a portion of your paycheck directly from your employer, and bank levies, where they can seize funds directly from your bank account without prior notice. These actions can be financially devastating and are often the catalyst that pushes a taxpayer to seek professional help immediately. In this first chapter, we have laid the groundwork. We've defined the stressful reality of facing IRS issues, clarified the role of the tax relief industry, and introduced Tax Network USA as a company operating within that space. We've also outlined the core problems, back taxes, unfiled returns, liens, and levies, that create the demand for these specialized services. Understanding these foundational concepts is crucial as we move forward in our neutral examination. We are not just looking at a company. We are exploring a critical and often misunderstood part of the American financial system. In our next chapter, we will take a closer look at the specific services and resolution options that Tax Network USA claims to offer. We will delve into terms like offer and compromise, installment agreements, and penalty abatement to understand what these potential solutions entail and the realities behind them. Thank you for listening to this first chapter. As we conclude, please remember that this content is for informational purposes only. Always seek advice from a qualified, independent, and licensed professional for your specific tax situation. Welcome back to our neutral, in-depth review of Tax Network USA and the world of tax resolution. In our first chapter, we set the stage by discussing the common tax problems that lead individuals and businesses to seek professional help. Today, we're taking a closer look at the specific solutions that companies like Tax Network USA claim to facilitate. These are the tools that tax professionals use to negotiate with the IRS on a client's behalf. Before we dive into these services, we must reiterate our disclaimer. This content is for informational and educational purposes only and should not be taken as legal, financial, or tax advice. The options we are about to discuss have strict eligibility requirements and are not guaranteed for any taxpayer. Always consult with your own independent, licensed tax professional to understand what options may be available for your unique circumstances. So, when a company like Tax Network USA takes on a client, what are they actually trying to achieve? Their goal is to find a formal, legal resolution to the client's tax debt. Let's explore the primary avenues they, and other firms in this industry, typically pursue. One of the most well-known and often misunderstood resolution options is the offer and compromise, or OIC. You may have heard advertisements from various companies promising to settle tax debts for pennies on the dollar. The OIC is what they are usually referring to. An offer and compromise is an agreement between a taxpayer and the IRS that resolves the taxpayer's tax liability for a lower amount than what they originally owed. This sounds like an ideal solution, but it is crucial to understand that the IRS does not grant these easily. An OIC is generally only accepted when the taxpayer can prove they do not have the ability to pay their full tax debt, or that doing so would create a significant economic hardship. The IRS will conduct a thorough investigation into the taxpayer's financial situation, looking at their assets, income, expenses, and future earning potential. A tax resolution firm's role in this process is to prepare the extensive financial paperwork, build a case for why the taxpayer qualifies, and formally submit the OIC package to the IRS for consideration. It is a lengthy and complex process, and the IRS has a very specific formula to determine a taxpayer's reasonable collection potential. Acceptance is never guaranteed. A more common and straightforward resolution is the installment agreement. This is an arrangement where the IRS allows a taxpayer to make monthly payments for a set period to pay off their tax debt in full. While this doesn't reduce the amount of tax owed, it can stop more aggressive collection actions like levies and wage garnishments. For taxpayers who have the ability to pay their debt over time, this is often the most viable path forward. There are different types of installment agreements, from guaranteed agreements for smaller debts to more complex agreements for larger liabilities that require more financial disclosure. The role of a tax professional here is to negotiate the terms of the agreement, aiming for a monthly payment amount that the taxpayer can realistically afford without defaulting. They will work to present the taxpayer's financial picture in a way that supports a sustainable payment plan. Next, let's discuss penalty abatement. When a taxpayer fails to file or pay on time, the IRS typically adds penalties to the original tax debt. These penalties can accumulate rapidly and significantly increase the total amount owed. Penalty abatement is the process of requesting that the IRS remove some or all of these penalties. To qualify, a taxpayer usually needs to show what the IRS calls reasonable cause. This could be a serious illness, a natural disaster, a death in the family, or incorrect advice from a tax professional. The first time a taxpayer is late filing or paying, they may also qualify for what is known as first-time penalty abatement. A firm like Tax Network USA would assist by identifying the reasons for the non-compliance, gathering the necessary supporting documentation, and writing a persuasive argument to the IRS explaining why the penalties should be removed. While the underlying tax must still be paid, successful penalty abatement can substantially reduce the overall debt. Finally, For taxpayers in severe financial distress, there is a status known as currently not collectible, or CNC. This is not a permanent solution, but a temporary suspension of collection activity. If a taxpayer can demonstrate to the IRS that they have no ability to make payments on their tax debt due to unemployment, disability, or an income that is below basic living expenses, the IRS may place their account in CNC status. This means the IRS will stop sending notices and will not attempt to levy wages or bank accounts. It's important to note that the debt does not go away. Interest and penalties continue to accrue, and the IRS will periodically review the taxpayer's financial situation to see if their ability to pay has improved. A tax firm's job here is to provide the IRS with detailed financial proof that the client simply cannot afford to pay anything at the present time. In this chapter, we've outlined 4 of the primary tools in the tax resolution toolkit: the offer in compromise, the installment agreement, penalty abatement, and currently not collectible status. Understanding these options is the first step in demystifying the tax relief process. Each one is designed for a very different financial situation and comes with its own set of strict rules and documentation requirements. The value proposition of a company like Tax Network USA is their claim to have the expertise to navigate these options and advocate for the best possible outcome available under the law. In our next chapter, we will discuss the typical process a client can expect when they engage a tax relief firm, from the initial consultation to the final resolution. Once again, thank you for listening. Remember to seek personalized advice from a qualified professional for any tax-related matters. Welcome back. In the previous chapters, we identified the common tax problems many Americans face and explored the specific resolution services that companies like Tax Network USA claim to offer. Now we will walk through the typical process a client might experience when they decide to hire a tax relief firm. What happens after you make that first phone call? As always, we must begin with our important disclaimer. This chapter describes a generalized process based on industry standards and publicly available information. It is for educational purposes only, and is not a guarantee of any specific experience. This is not financial, legal, or tax advice. For guidance on your personal situation, you must consult with an independent and licensed tax professional. The journey with a tax resolution firm almost always begins with an initial consultation. This is typically a free, no-obligation phone call. During this call, a representative from the company, often a case analyst or a similar consultant, will speak with you to understand the basics of your tax situation. They will ask questions like, how much do you believe you owe? For which tax years is the debt? Have you received any recent notices from the IRS? Are you facing active collection measures like a wage garnishment or a bank levy? The goal of this initial call is for the firm to determine if you are a potential candidate for their services, and for you to get a feel for the company. It's a critical two-way interview. If after this initial discussion, it seems there is a basis to move forward, the process typically moves to the investigation phase. This is a crucial and non-negotiable step. Before any firm can know how to solve your tax problem, they must understand it completely from the IRS's perspective. To do this, you will be asked to sign a special IRS Power of Attorney form, usually Form 2848. This document does not give the company control over your finances. Instead, it authorizes their tax professionals, the enrolled agents, CPAs, or attorneys, to speak directly to the IRS on your behalf. Once this form is on file with the IRS, the company's professionals can obtain your complete tax transcripts and records. This allows them to see exactly what the IRS sees: which years have unfiled returns, the precise amount of tax, penalties, and interest owed, and the history of any collection actions. This step is designed to move past guesswork and establish a clear, factual foundation for your case. Once the investigation is complete, the firm enters the strategy and resolution phase. At this point, their team of tax professionals will analyze the information they've gathered. Based on your official IRS records and the financial information you have provided, they will determine which, if any, of the resolution programs we discussed in Chapter 2 you may be eligible for. This is where their claimed expertise comes into play. They will assess whether an offer in compromise is a realistic possibility, calculate a potential monthly payment for an installment agreement, or determine if you have grounds for a penalty abatement request. Following this analysis, they should present you with a proposed plan of action. A reputable firm will clearly explain their findings and recommend a specific strategy. They should outline the steps they will take, the forms they will prepare, and the potential outcomes, including the best case and more likely scenarios. This is a critical moment for you as a client. It is your opportunity to ask detailed questions, and ensure you understand the proposed path forward. Be wary of any company that makes absolute guarantees of success, such as promising a specific settlement amount. The final decision always rests with the IRS. If you agree to the proposed strategy, the company will then move to implementation. This is where their team prepares and submits the necessary paperwork to the IRS. For an offer in compromise, this involves a lengthy application and detailed financial statements. For an installment agreement, it means submitting the appropriate request and negotiating the terms. Throughout this period, the tax firm is responsible for managing all communication with the IRS, responding to any requests for additional information, and keeping you informed of the progress. This phase can take anywhere from a few months to over a year, depending on the complexity of the case and the IRS's processing times. Finally, if the strategy is successful, you reach the case closure stage. You will receive official notification from the IRS confirming the terms of your resolution, be it an accepted offer in compromise, an approved installment agreement, or confirmation of currently not collectible status. Your case with the tax relief firm is then typically closed, and you are responsible for adhering to the terms of your agreement with the IRS. This includes making all agreed-upon payments on time, and staying current with all future tax filing and payment obligations. In this chapter, we have traced the client journey from the first call to the final resolution. Understanding this multi-step process, consultation, investigation, strategy, implementation, and closure, is key to demystifying how these firms operate. In our next chapter, we will address a crucial topic: the costs and fees associated with hiring a tax relief company like Tax Network USA. Thank you for joining us. Please remember this information is for educational purposes and is not a substitute for professional advice from a qualified expert. Hello and welcome back to our neutral review of Tax Network USA and the tax resolution industry. In our previous chapters, we've covered the what, why, and how of tax relief services. Today, we are tackling one of the most important and practical questions any potential client will have. What does it cost to hire a tax relief firm? Before we break down the numbers, we must once again state our critical disclaimer. This chapter discusses common fee structures and potential cost ranges for informational purposes only. It is not a quote, a guarantee of any price, or financial advice. The actual fees charged by any company, including Tax Network USA, can vary widely based on the complexity of your case and their specific business model. You must have a clear, written fee agreement with any professional you hire before beginning any work. When you engage a tax relief company, you are paying for their time, their expertise, and their professional representation. The fee structures in this industry are not always standardized, but they generally fall into a few common models. Let's explore them. The most common model you will likely encounter is a phase-based or two-phase fee structure. This is often seen as a consumer-friendly approach. In this model, you are not required to pay the entire fee for the whole resolution process upfront. Instead, the service is broken into two distinct phases, each with its own cost. Phase 1 is typically the investigation phase, which we discussed in the last chapter. The fee for this phase covers the work of obtaining a power of attorney, contacting the IRS on your behalf, pulling your official tax transcripts, and conducting a thorough analysis of your situation. The cost for this initial phase is a flat fee, which can range from a few hundred to over $1,000, depending on the firm. This fee is paid to get a definitive, factual picture of your tax problem. At the end of Phase 1, the company should present you with their findings and a clear proposal for the resolution options you qualify for. Phase 2 is the resolution phase. If you decide to proceed after the investigation, you will then pay a separate fee for the company to execute the proposed strategy. This fee covers the extensive work of preparing and filing all the necessary paperwork, negotiating with the IRS, and seeing the case through to completion. The cost of Phase 2 is where you will see significant variation. A relatively straightforward installment agreement for a modest debt will cost far less than preparing and defending a complex offer in compromise for a six-figure liability. This resolution fee can range from a couple of $1,000s to tens of thousands of dollars for very complex cases. Another common model is a flat fee structure. In this scenario, the company will quote you one single price to handle your case from beginning to end. This fee is meant to cover everything: the investigation, the resolution work, all communications, and follow-ups. The primary benefit of a flat fee is predictability. You know the total cost of the service from the outset, with no risk of escalating hourly charges. This fee is determined after the initial consultation, where the firm assesses the likely complexity of your case. It's crucial with a flat fee model to have a written agreement that clearly spells out exactly what services are included, and, just as importantly, what is not. Less common in this industry, but still a possibility, are hourly rates. Just like with a traditional law firm or accounting practice, the company would charge you for the actual time their professionals spend working on your case. They would track their hours and bill you periodically. While this can be cost-effective for very simple, quick issues, it can become very expensive for complex cases that drag on for many months. The lack of cost predictability is a significant drawback for many consumers facing financial hardship. Finally, it is essential to discuss what the fees do not cover. The fees you pay to a tax relief firm are for their professional services only. They do not go toward paying your actual tax debt. You are still responsible for paying the underlying tax, interest, and any penalties that are not abetted, according to the terms of the final agreement you reach with the IRS. In this chapter, we have demystified the costs associated with hiring a tax relief company. We've explored the common phase-based model, the predictable flat fee structure, and the less common hourly rate system. Understanding these models is essential for any consumer looking to engage a firm like Tax Network USA, allowing you to ask informed questions and clearly understand the financial commitment you are making. In our next chapter, we will shift our focus to the industry itself, discussing how to research a tax relief company and what potential red flags to watch out for. Thank you for listening. This information is for educational purposes and should not be considered financial advice. Welcome back to our ongoing series. We've discussed the problems, the potential solutions, and the costs associated with tax relief. Now we arrive at what is perhaps the most critical chapter for any consumer: how to conduct your own research and what warning signs or red flags to watch for in the tax resolution industry. Making an informed decision is your best protection. As we begin, please remember our standard disclaimer. This information is for educational and informational purposes only and does not constitute legal or financial advice. The guidance provided is based on best practices recommended by consumer protection agencies. Always conduct your own thorough research before engaging any financial or legal professional. When you are in a stressful situation with the IRS, it can be tempting to hire the first company that promises a quick fix. However, taking the time to perform due diligence is essential. So, where do you start? First, check with the Better Business Bureau, or BBB. The BBB is a nonprofit organization focused on advancing marketplace trust. You can look up any company, including Tax Network USA, on the BBB website. Pay attention to several factors: their overall letter grade, the details of any customer complaints filed against them, how the company responded to those complaints, and any customer reviews. A long history of unresolved complaints or a pattern of similar issues raised by different clients can be a significant indicator of potential problems. Next, verify the credentials of the professionals who will be handling your case. As we've mentioned, only specific professionals have the authority to represent taxpayers before the IRS. These are enrolled agents, EAs, certified public accountants, CPAs, and attorneys. You have the right to ask for the names and license numbers of the professionals who would be assigned to your case. The IRS maintains an online directory where you can verify the credentials of attorneys and CPAs. For enrolled agents, you can check their status directly with the IRS. A legitimate firm should be transparent about who their licensed professionals are. You should also conduct a general online search for the company's name. Look beyond their own website and paid advertisements. Search for independent reviews, news articles, or discussions on forums. While you should be critical of anonymous reviews, a widespread and consistent pattern of negative feedback across multiple independent platforms should be taken seriously. Conversely, be wary of a company that has nothing but flawless 5-star reviews, as this can sometimes be a sign of inauthentic or solicited testimonials. Now let's talk about the critical red flags to watch out for during your initial conversations with a firm. The biggest red flag is a guarantee of a specific outcome. Be extremely cautious of any company that guarantees they can reduce your tax debt by a specific amount or percentage. For example, if you hear the phrase, "We guarantee we can settle your $10,000 debt for just $1,000. You should be on high alert. No one can guarantee the outcome of a negotiation with the IRS. The final decision always rests with the government, and any promise to the contrary is a serious misrepresentation. Another red flag is a demand for a large upfront fee before they have even conducted a proper investigation into your case. As we discussed in a previous chapter, a reputable firm will typically have a phased approach. They should first conduct a paid investigation to understand the facts of your case before recommending a solution. and charging for the full resolution service. Demanding thousands of dollars before they have even pulled your IRS transcripts is a high-pressure sales tactic, not a professional service model. Be wary of companies that create a false sense of urgency or use fear-based tactics. While dealing with the IRS is serious, a professional should be calm and methodical. High-pressure tactics, such as telling you that you must sign up immediately to avoid imminent disaster without giving you time to think or do research, are unprofessional and a major warning sign. Finally, avoid any company that suggests you misrepresent information or lie on any official forms. This is not only unethical but also illegal. Engaging in such activity can lead to severe civil penalties and even criminal prosecution. A legitimate tax professional will always work within the bounds of the law and will never advise you to be untruthful with the IRS. In this chapter, we have provided a practical guide for vetting any tax relief company by checking with the BBB, verifying professional credentials, and being vigilant for red flags like guaranteed outcomes and high-pressure sales tactics. You can better protect yourself and make a more confident decision. In our next chapter, we will begin to synthesize this information by discussing the publicly stated pros and cons of hiring a firm like Tax Network USA. Thank you for listening. Remember, this is educational content, not professional advice. Hello and welcome back. In our journey so far, we have explored the services, processes, costs, and consumer warnings related to the tax relief industry. Now, it's time to synthesize this information and have a balanced discussion about the potential advantages and disadvantages of hiring a firm like Tax Network USA. This chapter aims to provide a neutral framework to help you weigh this important decision. As we proceed, please keep our essential disclaimer in mind. The following points are generalized and for educational purposes only. They are not financial or legal advice and do not reflect the guaranteed experience with any specific company. Your outcome will always depend on the facts of your case and the quality of the professionals you hire. Let's begin by exploring the primary arguments in favor of hiring a tax resolution firm, the pros. Pro number 1. Professional representation and expertise. This is perhaps the most significant advantage. The U.S. tax code is extraordinarily complex. A reputable firm employs credentialed professionals, enrolled agents, CPAs, and attorneys, who understand the system's nuances. They know the specific forms, the deadlines, and the correct channels of communication. For someone with no experience in this area, trying to navigate it alone can lead to costly mistakes. By hiring a firm, you are essentially hiring an expert to manage a highly specialized and technical process on your behalf. Pro number 2. Lifting the burden of communication. Dealing with the IRS can be incredibly stressful and time-consuming. When you sign a power of attorney, the tax firm takes over all direct communication with the IRS regarding your case. This means the phone calls, the letters, and the requests for information are handled by your representative. This can provide immense peace of mind and free up your time and energy to focus on other aspects of your life. It effectively creates a professional buffer between you and the tax agency. Pro number 3. Potentially stopping aggressive collection actions. One of the most urgent reasons people seek help is to stop actions like wage garnishments or bank levies. Once a qualified professional is officially representing you and has contacted the IRS, they can often negotiate a temporary hold on these collection activities while a long-term solution is being worked out. This can provide immediate and critical financial relief, allowing you to meet your essential living expenses. Now let's turn to the other side of the coin and discuss the potential disadvantages and risks, the cons. Con number 1. The cost of services. Professional help is not free, and tax relief services can be expensive. As we discussed in Chapter 4, the fees can range from several $100s for an investigation to many thousands for a full resolution. For someone already struggling with tax debt, this additional cost can be a significant financial burden. You must weigh whether the potential benefit of the service justifies the expense, especially when some solutions, like a simple installment agreement, can sometimes be set up by the taxpayer directly with the IRS for a much lower fee. Con number 2. The risk of scams and ineffective companies. While many legitimate and helpful firms exist, the tax relief industry has unfortunately attracted some predatory players. As we covered in the last chapter, some companies use high-pressure sales tactics, make unrealistic promises, and charge high fees for little or no work. There is a real risk of choosing the wrong company and ending up in a worse position, out of thousands of dollars and with your tax problem unresolved. This is why thorough due diligence is not just recommended, it is absolutely essential. Con number 3. No guaranteed outcomes. This is a crucial point to remember. Hiring a firm, no matter how reputable or expensive, does not guarantee a specific result. They cannot force the IRS to accept an offer in compromise.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
Or to grant a penalty abatement. A tax professional can only build the strongest possible case based on your financial reality and the tax code. The final decision is always made by the IRS. A potential downside is paying a significant fee for a desired outcome that is ultimately denied because you did not meet the strict legal and financial qualifications. In this chapter, we have weighed the core pros and cons. The advantages, expertise, reduced stress, and protection from collections, are compelling. However, they must be balanced against the significant disadvantages, the high cost, the risk of scams, and the lack of guaranteed results. In our next chapter, we will delve into a frequently asked question. Can I do this myself? We will explore the options available to taxpayers who want to deal directly with the IRS. Thank you for listening. Remember, this is for educational purposes and is not a substitute for professional advice. Hello, and welcome back to our neutral series on tax resolution. In our last chapter, we weighed the pros and cons of hiring a professional firm. That discussion naturally leads to a very important question. Can you handle your tax problems yourself without hiring a company like Tax Network USA? The short answer is yes, it is absolutely possible. This chapter is dedicated to exploring the do-it-yourself path. As we begin, we must underscore our foundational disclaimer. This information is for educational purposes only and is not a substitute for professional tax advice. The processes described are based on information provided by the IRS, which can change. Attempting to resolve tax issues on your own requires careful attention to detail and a significant investment of your time. This is not legal or financial advice. The IRS has created several pathways for taxpayers to resolve their debts directly. For many people with straightforward situations, this can be the most cost-effective option. Let's look at the most common scenarios. First, let's consider the installment agreement. If you owe back taxes but can't pay the full amount at once, you can request a payment plan. The IRS has an online payment agreement application available on their website, irs.gov. For individuals who owe a combined total of under $50,000, comprising tax, penalties, and interest, you can often apply online and receive immediate notification of whether your plan is approved. The process is largely automated and designed to be user-friendly. You will need your personal information and an estimate of the total debt. The IRS charges a setup fee for an installment agreement, but it is significantly less than what you would pay a third-party firm for the same service. Next is the offer in compromise OIC. While this is a far more complex process, the IRS provides a detailed OIC pre-qualifier tool on its website. This free tool asks a series of questions about your financial situation to help you determine if you might be eligible before you invest time and effort into the full application. If you appear to be a candidate, you can download the official Form 656 booklet. This booklet contains all the necessary forms and very detailed, step-by-step instructions on how to calculate an appropriate offer and complete the extensive financial disclosures required. While a tax professional's expertise can be valuable in preparing a compelling case, the IRS provides these public-facing tools for taxpayers who wish to file on their own. What about penalty abatement? If you believe you have reasonable cause for filing or paying late, you can request that the IRS remove the penalties. You can do this by calling the phone number on your IRS notice or by writing a letter to the IRS. For a first-time penalty, you can often make the request by phone. For a request based on reasonable cause, you will need to send a written explanation and provide supporting documentation, such as medical records or a death certificate, that validates your claim. The key is to be clear, concise, and honest in your explanation. Beyond these specific programs, the IRS offers several free resources. The Taxpayer Advocate Service, TAS, is an independent organization within the IRS that protects taxpayers' rights. If you are facing a significant hardship due to a tax problem and have not been able to resolve it through normal channels, TAS may be able to help at no cost. Additionally, for low-income taxpayers, the IRS supports low-income taxpayer clinics, LICs, across the country. These clinics provide free or low-cost assistance from qualified professionals to eligible individuals. So, when should you consider the DIY approach? This path is often most suitable for individuals with relatively straightforward cases, who are organized, comfortable filling out detailed forms, and willing to communicate directly with the IRS. If your tax debt is manageable and you simply need a payment plan, the online installment agreement is an excellent tool. However, the DIY path is not for everyone. It requires a significant amount of time, patience, and diligence. If your case is highly complex, involving multiple unfiled returns, business tax issues, or a very large debt, or if you feel overwhelmed by the process, seeking professional help may be a more prudent choice. The primary risk of the DIY approach is making a mistake on the paperwork or failing to provide the necessary information, which could lead to your application being rejected. In this chapter, we have outlined the viable options for resolving tax issues on your own. From online payment plans to detailed instruction booklets for an OIC, the IRS provides the tools for those willing to use them. In our next chapter, we will examine customer reviews and testimonials related to Tax Network USA, and discuss how to interpret such feedback as part of a neutral review. Thank you for listening. Please remember, this educational content is not a replacement for personalized professional advice. Hello, and welcome back to our neutral review of Tax Network USA and the tax resolution industry. In our previous chapters, we've covered the services, processes, costs, and even the do-it-yourself options. Today, we're diving into a crucial topic: customer reviews. We will explore how to analyze testimonials and complaints from a neutral perspective to get a clearer picture. Before we proceed, it is essential to state our standard disclaimer. The information discussed in this chapter is for educational purposes only. It is not an endorsement or a critique of any specific company and should not be considered legal or financial advice. Customer reviews are based on individual experiences and are not a guarantee of your own outcome. Customer reviews are a powerful tool for evaluating any service-based business. For firms like Tax Network USA, you will find a multitude of reviews on platforms like the Better Business Bureau, BBB, Trustpilot, Google Reviews, and others. However, knowing how to properly analyze these reviews is a skill in itself. Let's first talk about positive reviews or testimonials. You will often see reviews where clients praise a company for reducing their tax burden, stopping a wage garnishment, or for the excellent customer service they received from a specific agent. When reading these, it's important to look for details. A generic comment like, "They are the best," is less informative than a specific one like, "My case manager, John, listened to my situation carefully and kept me updated every step of the way." Positive reviews can give you an idea of a company's strengths and its ability to deliver on its promises. Now, let's turn our attention to negative reviews or complaints, which can often be even more informative. Tax resolution is a complex and emotionally charged process, so it's not unusual for some clients to be dissatisfied. When reading complaints, try to identify specific patterns or recurring themes. For example, are multiple clients mentioning slow communication? Do several people bring up unexpected fees or charges? Or is the core of the complaint that their desired outcome, such as an offer in compromise, was not achieved? Something we know is never guaranteed? Understanding the context is critical here. When a client complains that their offer in compromise was rejected by the IRS, it may not necessarily be the firm's fault. It could be that the client was simply not legally eligible. However, if the complaint is that the firm sold them false hope on an application that was never viable to begin with, that is a much more serious concern. Therefore, trying to understand the root cause of the complaint is extremely important. When analyzing reviews for any company, you should also be cautious of fake or inauthentic feedback. Reviews that are overly emotional, vague, and full of grammatical errors can sometimes be unreliable. Similarly, a flood of nothing but flawless, 5-star reviews can also be a red flag. The most reliable picture often emerges when you look at the average trend across a large number of reviews. A few negative reviews among hundreds of positive ones is normal, but if the balance is heavily weighted toward complaints, and those complaints echo similar problems, that should be taken as a significant warning. In this chapter, we have learned how to look at customer feedback through a neutral and critical lens. Testimonials can highlight a company's strengths, while complaints can alert us to potential weaknesses and risks. When making a decision about Tax Network USA or any other firm, it is essential to consider both types of reviews to form a balanced and informed opinion. In our next chapter, we will compare Tax Network USA to its competitors in the industry and discuss what factors to consider when choosing a tax relief firm. Thank you for being with us. Remember, this content is for educational purposes only and is not a substitute for professional advice. Hello, and welcome back to our neutral exploration deep inside the tax resolution industry. In the last chapter, we navigated the complex world of customer reviews. Today, we are zooming out to look at the bigger picture. How does a firm like Tax Network USA compare to other options in the marketplace? This chapter will provide you with a framework for evaluating any tax relief provider you might consider. Before we begin our comparison, please keep our mandatory disclaimer in mind. The purpose of this chapter is to equip you with the knowledge to compare different types of tax resolution providers. It is not meant to label any specific company as superior or inferior. This information is not legal or financial advice, and the right choice for you will depend entirely on your personal situation and needs. When you search for tax relief, you'll find that the market is generally composed of three types of providers. First, there are national firms, like Tax Network USA, which serve clients across the entire country. Second, you have smaller, regional firms that may operate in a handful of states. And third, there are local independent professionals, such as a solo CPA or tax attorney in your town. To make an informed choice, it's essential to compare them based on a few key criteria. Criterion 1. Fee structure and transparency. We've discussed fees before. Now, when comparing, ask the questions. Does the firm offer a flat fee? Do they use a phase-based payment model? Is every potential cost clearly outlined in a written agreement? A large national firm often has a standardized, well-defined fee structure. A local professional, on the other hand, might bill you on an hourly basis, which could be cost-effective for a simple problem, but can become expensive for complex cases. Transparency is the most important factor here. Criterion 2. Team composition and experience. Who will be handling your case? Does the firm's website clearly identify their enrolled agents, CPAs, or attorneys and their credentials? National firms often boast a large and diverse team with a wide range of specialists, which can be an advantage. However, with a local professional, you get to work face-to-face and know exactly who is managing every aspect of your case. Ask yourself which you are more comfortable with. Criterion 3. Process and customer service. A large national firm typically has a streamlined, technology-driven process. They may have client portals and a dedicated customer service department, which can make communication easier. But it can also mean you'll be speaking with different people at different stages. With a local professional, you will likely work with the same person from start to finish, which allows for a more personal level of service. Which is more important to you, a standardized process or a personal relationship? Criterion 4. Reputation and track record. Better Business Bureau ratings and online reviews are important for all types of providers. A national firm may have thousands of reviews, giving you a broad overview of their performance. A local professional might have far fewer online reviews, but their reputation may be well established within the local community through word of mouth. In this case, you could check with local business associations for references. Using these 4 criteria, you can draw a meaningful comparison between Tax Network USA and other alternatives. There is no single right or wrong answer. For one person, the resources and processes of a large, experienced national firm might be the best fit. For another, the direct one-on-one relationship with a local tax attorney might feel more reliable. In this chapter, we have provided a comparative framework to help you make an informed decision. The key is to understand your own needs and to find a provider that best aligns with your situation, your budget, and your comfort level. In our next chapter, we will discuss the roles of the different professionals in this industry. What is the difference between an enrolled agent, a CPA, and a tax attorney? Thank you for being with us. Remember, this content is for educational purposes and is not a substitute for professional advice. Hello, and welcome back to our neutral review series. In past chapters, we've talked about tax relief firms and the services they offer. But who are the professionals actually doing the work? Today, we are going to define and differentiate the 3 main types of licensed professionals you will encounter in the tax resolution industry: the enrolled agent EA, the certified public accountant CPA, and the tax attorney. As always, we must begin with our important disclaimer. This information is for educational purposes only. It is not a recommendation to hire any specific type of professional, nor is it legal advice. The best choice for your situation depends entirely on the specific details of your case. Let's start with the enrolled agent, or EA. An EA is a tax specialist with a federal license. What makes them unique is that their license comes directly from the Internal Revenue Service itself. They earn this credential either by passing a comprehensive, three-part examination that covers all aspects of the tax code, or through sufficient experience working at the IRS. Because their expertise is focused exclusively on tax matters, they are often called America's tax experts. An EA has unlimited practice rights before the IRS, which means they can represent any taxpayer on any tax issue, including audits, collections, and appeals, in any of the 50 states. Next, let's discuss the Certified Public Accountant, or CPA. A CPA is an accounting professional licensed by their respective state board of accountancy. The path to becoming a CPA involves extensive education, passing the rigorous 4-part uniform CPA examination, and meeting strict experience requirements. While EAs are pure tax specialists, CPAs have a much broader scope of expertise. Their work can include financial audits, business consulting, financial planning, and forensic accounting, in addition to tax preparation and representation. Like EAs, CPAs also have unlimited practice rights to represent taxpayers before the IRS. A CPA who specializes in tax can be an excellent choice, particularly for businesses or individuals with complex financial situations that go beyond just the tax return itself. Finally, we have the tax attorney. A tax attorney is a lawyer who specializes in the complex field of tax law. They have completed law school and have passed a state bar examination, which licenses them to practice law. Their primary advantage lies in the legal arena. While EAs and CPAs can represent you before the IRS in administrative matters, only an attorney can represent you in a court of law, such as the U.S. Tax Court. Furthermore, communications with a tax attorney are protected by attorney-client privilege, which offers a higher and more protected level of confidentiality than the privilege that applies to EAs and CPAs. A tax attorney is typically sought for the most serious and complex situations, such as cases involving potential criminal charges, tax fraud investigations, or litigation with the IRS. So, to summarize the key differences, enrolled agents are federally licensed tax specialists. CPAs are state-licensed accounting experts with a broad financial skill set. Tax attorneys are state-licensed lawyers who can provide legal representation in court and offer attorney-client privilege. All three are highly qualified professionals with the authority to represent you before the IRS. Understanding their distinct specializations can help you better evaluate the team at a firm like Tax Network USA, or help you decide what kind of independent professional might be the right fit for your specific needs. In our next chapter, we will discuss what you should do to prepare for your initial consultation with a tax relief professional. Thank you for listening. Please remember this is educational content and not a substitute for advice from a qualified professional. Hello and welcome back. In our last chapter, we clarified the roles of the different professionals who can help with tax issues. Now that you know who they are, the next step is preparing to speak with them. A productive initial consultation can set the entire tone for your case. Today, we are providing a practical checklist of what you should do and gather before you make that first call. As we always do, we must begin with our disclaimer. This guide is for general informational and educational purposes only. It is not financial or legal advice. The items listed are suggestions to help you have an organized conversation, not a complete list of everything that may be required for your specific case. The goal of preparing for this call is threefold. First, it helps the consultant on the other end give you a more accurate initial assessment. Second, it saves you time and makes the process more efficient. And third, it helps you feel more in control of the situation and better equipped to evaluate the firm you are speaking with. Let's break this down into a simple checklist. Part 1. Gather your key documents. Having the right paperwork on hand is the most important step. IRS notices. First and foremost, locate any and all letters or notices you have received from the IRS or a state tax agency. These documents are critical. They contain specific codes, dates, and amounts that tell a professional exactly what the government is claiming. The most recent notice is the most important one. Look for notice numbers like a CP-14, which is an initial notice of balance due, or a CP-504, which is a final notice of intent to levy. Past tax returns. Have copies of your last 2 to 3 filed tax returns available. This gives the consultant a quick history of your income and filing status. If you have unfiled returns, that is also a key piece of information to share. Simply make a list of the years you believe you have not filed. A snapshot of your finances. You don't need a perfect balance sheet, but you should have a basic understanding of your current financial situation. This includes a rough idea of your monthly income from all sources, as well as a list of your major monthly expenses, such as rent or mortgage, car payments, and utilities. This is crucial for determining potential eligibility for programs like an offer in compromise or currently not collectible status. Part 2. Understand your story. The numbers only tell part of the story. Be prepared to briefly and honestly explain the circumstances that led to the tax debt. Think about the why. Did you experience a major life event, like a job loss, a medical emergency, or a divorce? Did a business venture fail? Understanding the root cause is not about making excuses. It can be legally relevant for things like a penalty abatement request based on reasonable cause. Part 3. Prepare your questions. This initial call is a two-way interview. You are evaluating the firm just as much as they are evaluating your case. Prepare a short list of questions to ask them. Consider these. Based on our conversation, who on your team would be handling my case, and what are their specific credentials? Are they an EA, a CPA, or a tax attorney? Can you explain your fee structure in detail? Is it a flat fee or phased? Will I receive a written fee agreement before I pay anything? What is your firm's process for the investigation phase, and what can I expect during that time? And finally, a very important question. Without making any guarantees, what are the possible resolution options you see for a situation like mine? By preparing these documents, understanding your story, and having your questions ready, you transform the first call from a moment of stress into a proactive, fact-finding mission. In our next chapter, we will tackle some of the most common myths and misconceptions surrounding tax relief. Thank you for listening. Please remember, this educational content is not a substitute for advice from a qualified professional. Hello, and welcome back to our series. In the world of tax debt, there is a lot of information floating around, some of it true and much of it false. These myths and misconceptions can cause unnecessary fear and lead people to make poor decisions. Today we are going to act as myth-busters, tackling some of the most common misunderstandings about the IRS and tax relief. As we dive in, we must start with our standard disclaimer. This information is for educational purposes only, and is intended to clarify general concepts. It is not financial or legal advice. The facts presented are based on current IRS rules, which can change. Always consult with a qualified professional regarding your specific circumstances. Myth number 1. If I wait long enough, the IRS will forget about my tax debt. This is a dangerous misconception. The reality is that the IRS has a very long memory. For most tax debts, there is a law called the Collection Statute Expiration Date, or CSED. This law generally gives the IRS 10 years from the date the tax was assessed to collect the debt. 10 years is a very long time, and the IRS is persistent. Furthermore, certain actions, like filing for bankruptcy or submitting an offer in compromise, can pause or toll the 10-year clock, extending the collection period even further. The idea that a tax debt will simply vanish if you ignore it is incorrect. Myth number 2. Anyone can settle their tax debt for pennies on the dollar. You have likely seen the advertisements. The pennies on the dollar claim refers to the offer in compromise, or OIC program. While the OIC is a legitimate IRS program, this myth makes it sound like it's available to everyone. The reality is that the OIC is intended for taxpayers in serious financial distress, and it has very strict eligibility rules. The IRS conducts a deep analysis of your income, expenses, assets, and future earning potential to determine your reasonable collection potential. In 2023, for instance, the IRS accepted only about 40% of OIC applications. It is not a simple loophole. It is a specific program for those who truly cannot pay their full debt. Myth number 3. You will go to jail just for owing back taxes. This is perhaps the most fear-inducing myth of all. The reality is that there is a major legal difference between civil tax debt and criminal tax evasion. Simply being unable to pay your taxes is a civil matter. The IRS's primary goal in these cases is to work with you to collect the money owed. Criminal charges, including prison time, are reserved for cases of willful tax evasion or fraud. This means intentionally hiding income, deliberately filing a false return, or taking other fraudulent steps to deceive the IRS. For the vast majority of people who have fallen behind due to hardship or honest mistakes, jail is not a realistic concern. Myth number 4. Hiring a tax relief firm instantly stops all IRS collection actions. While hiring a professional is a crucial step toward gaining control, it is not a magic wand. The reality is that collection actions that are already in motion, like a wage garnishment, will not stop the moment you hire a firm. Once you sign a power of attorney, your representative must then formally contact the IRS to inform them of the representation. They can then begin negotiating to get a hold placed on collection activities while they work on a permanent solution. This takes time. While representation is the key to stopping collections, the process is not instantaneous. By understanding the reality behind these common myths, you can approach your tax situation with a clear head, free from unnecessary fear and false hope. In our next chapter, we will discuss the emotional side of dealing with tax debt and explore some general strategies for managing the stress. Thank you for listening. Please remember, this educational content is not a substitute for professional advice. Hello and welcome back. Throughout this series, we have focused on the practical, technical, and financial aspects of tax problems. But there is another side to this issue that is just as important: the emotional side. Dealing with a significant tax debt can be one of the most stressful experiences of a person's life. Today, we are going to acknowledge that stress and discuss some general, non-medical strategies for staying focused and moving forward. Before we go any further, it is absolutely critical to state the following disclaimer. This chapter is for informational and educational purposes only. It is not, and should not be considered, medical, psychological, or mental health advice. The feelings associated with financial distress can be serious. If you are feeling overwhelmed, experiencing severe anxiety, or depression, it is essential that you seek help from a qualified medical doctor, therapist, or mental health professional. The first and most important step in managing the emotional weight of tax debt is to acknowledge that your feelings are a normal reaction. It is common to feel a sense of anxiety when you see a letter from the IRS. It is normal to feel overwhelmed when looking at a large balance due. You might also experience feelings of shame, frustration, or fear about the future. These feelings are not a sign of weakness. They are a human response to a difficult and high-stakes situation. Recognizing this can be the first step toward regaining a sense of control. One of the primary drivers of this stress is a feeling of powerlessness. The debt can feel like an unstoppable force, and you can feel helpless against it. One of the most effective ways to counteract this feeling is to take small, concrete actions. The goal here is not to solve the entire problem in one day, but to simply make progress. Think back to our chapter on preparing for a consultation. The act of gathering your IRS notices and putting them in a single folder is a small step. The act of downloading your last few tax returns is a small step. The act of writing down a few questions to ask a professional is a small step. Each of these actions, no matter how minor, shifts your role from being a passive victim of the situation to being an active participant in the solution. This can have a powerful positive effect on your mindset. Another strategy is to focus on what you can control. You cannot control how long the IRS takes to process a case. You cannot control the exact outcome of a negotiation. But you can control how organized you are. You can control whether you open your mail. You can control whether you reach out for a consultation. Focusing your energy on these controllable actions, rather than worrying about the uncontrollable outcomes, can help reduce anxiety and keep you grounded in the present. Finally, it is important to break the pattern of isolation that often accompanies financial trouble. Many people feel embarrassed and keep their tax problems a secret, which can magnify the stress. While you should be careful about who you discuss financial matters with, seeking support can be invaluable. This doesn't necessarily mean asking for financial help. It can simply mean talking to a trusted friend or family member about the stress you are under. For professional guidance, remember the resources we've discussed throughout this series, such as consulting with a qualified tax professional who can provide clarity and a path forward, which in itself is a major stress reliever. In this chapter, we have acknowledged the very real emotional toll of tax debt. By recognizing your feelings as normal, taking small, actionable steps, focusing on what you can control, and avoiding isolation, you can better manage the stress and stay focused on finding a resolution. In our next chapter, we will discuss life after reaching a tax settlement and explore how to stay in good standing with the IRS going forward. Thank you for listening. And please, if you are struggling, reach out to a qualified health professional for help. Hello and welcome back. For the past 13 chapters, we have journeyed through the difficult process of confronting and resolving a major tax problem. Reaching a resolution with the IRS is a monumental achievement. But the journey doesn't end there. Today we'll discuss the crucial final phase, life after resolution, and how to build the habits that will keep you in good standing with the IRS for years to come. As we discuss these financial habits, we must begin with our essential disclaimer. This information is for general educational purposes and provides a high-level overview of best practices. It is not personalized financial or tax advice. You should always consult with a qualified professional to create a tax plan that is appropriate for your unique financial situation. Once your resolution is in place, your first and most important responsibility is to comply with the terms of your agreement. If you have an installment agreement, this means making every single payment on time, without fail. If you have an offer in compromise, it means paying the settlement amount as agreed and, critically, filing and paying all your taxes on time for the next 5 years.
Disclaimer. This video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
Defaulting on your agreement can have severe consequences. The IRS can void the resolution, reinstate the original full tax debt with penalties and interest, and immediately resume aggressive collection actions. With that foundation laid, the primary goal is to prevent a new tax debt from ever accumulating again. Here are 3 key areas to focus on. First, adjust your withholding. For most people who work for an employer, tax debt happens because not enough money was withheld from their paychecks throughout the year. The Form W for you fill out with your employer controls this. It is not a set-it-and-forget-it document. If you get a raise, get married, or start a side gig, you should revisit it. The IRS provides a free and excellent tool on its website called the Tax Withholding Estimator. You can use this tool to do a paycheck checkup and see if you are on track. It will even provide you with pre-filled W-4 forms that you can give to your employer to adjust your withholding to the correct amount. Second, master estimated taxes if you're self-employed. If you are a freelancer, independent contractor, or small business owner, you don't have an employer to withhold taxes for you. This means you are responsible for paying them yourself throughout the year in the form of quarterly estimated tax payments. This covers your income tax as well as your self-employment taxes for Social Security and Medicare. It requires discipline. A common best practice is to set aside a percentage of every payment you receive, perhaps 25 to 30%, depending on your income and location, into a separate savings account specifically for taxes. This ensures the money is there when your quarterly payment is due. Third, develop good record-keeping habits. Good records are your best defense against tax problems. At a minimum, you should have a simple system to track all your income and all your potential business expenses throughout the year. This can be a simple spreadsheet, a dedicated notebook, or accounting software. Keeping your records organized not only makes filing your tax return infinitely easier and more accurate, but it also ensures you can claim every deduction and credit you are legally entitled to, which can significantly lower your tax bill. Resolving a past tax debt gives you a clean slate. By complying with your agreement, adjusting your withholding, planning for estimated taxes, and keeping good records, you can ensure that slate stays clean. You move from a reactive position of fixing past problems to a proactive position of building a stable financial future. In our final chapter, we will summarize the key takeaways from this entire series and offer some concluding thoughts on your path forward. Thank you for listening. Remember, this is educational content, not professional advice. Hello, and for one final time, welcome back. We have reached the end of our comprehensive journey through the world of tax resolution. Over the past 14 chapters, our goal has been to pull back the curtain on a complex and often intimidating process. In this concluding chapter, we will summarize the most important takeaways from our series and leave you with some final thoughts for your path forward. First and foremost, our guiding theme has been that knowledge is power. The fear and stress of an IRS problem often come from the unknown. By learning the terminology from tax lien and levy to offer in compromise, you replace that fear with facts. By understanding the roles of enrolled agents, CPAs, and tax attorneys, you know who can help. Our goal was never to give you advice, but to give you the education needed to ask the right questions and make informed decisions. Second, remember that a structured process exists. Whether you choose to work with a national firm like Tax Network USA, a local professional, or even tackle the issue yourself, there is a path to resolution. It begins with a thorough investigation to understand the full scope of the problem. It moves to a strategy based on the facts of your case, and it concludes with a formal resolution. Knowing these steps exist can transform an overwhelming mountain into a series of manageable hills to climb. Third, always remember that you have options. We explored a variety of potential solutions, from installment agreements for those who can pay over time, to the offer in compromise for those in severe financial hardship. We also dedicated a chapter to the do-it-yourself path, showing you the tools the IRS provides for taxpayers who feel confident in handling their own case. There is no one-size-fits-all solution. The right path is the one that aligns with your specific financial reality and comfort level. Fourth, and this cannot be overstated, your due diligence is non-negotiable. We taught you how to research a firm, check credentials with the Better Business Bureau, and spot the critical red flags, like promises of guaranteed outcomes. Protecting yourself from ineffective or predatory companies is the most important action you can take. Finally, the ultimate goal is long-term tax health. Fixing a past problem is only half the battle. The true victory comes from building the habits we discussed in our last chapter, like adjusting your W-4, planning for estimated taxes, and keeping good records, to ensure you never find yourself in this situation again. You started this series perhaps feeling overwhelmed or uncertain. Our hope is that you finish it feeling empowered. You now have a roadmap. You have a new vocabulary. You know the questions to ask and the warnings to heed. The path to resolving a tax problem is not easy, but it is a path you can now walk with clarity and confidence. And so, we end where we began, with our most important and final piece of guidance. The information provided in this series has been for educational and informational purposes only. It is not, and was never intended to be, legal, financial, or tax advice. Your situation is unique. We strongly urge you to consult with your own qualified, independent, and licensed professional to address your specific needs. Thank you for listening. We wish you the very best on your path forward.
Disclaimer: this video is for informational and educational purposes only, and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.